Trade ideas, analysis of 10-year yields and 10-year notes. And I think the rebound in yields is nearing an end. And the trade idea is going to be the long side of the Treasury futures markets. We have seen the Treasury futures get hit pretty hard as yields popped up. And then after the election, as people have been just pouring into the stock market, we saw the Treasury market fall again, as there's some anticipation that the policies of Donald Trump will be very stimulative to the market, stimulative to the economy. Thus, the stock market moves up, and that is a problem for the bond market. I tend to disagree with that, just based on the effect of policy, and even the fact that they may decide that Donald Trump's policies are more deflationary than inflationary. I kind of stand alone on that belief. However, what I really want to look at now is much more the technical picture for the next number of weeks, and this particular trade idea that I think has a high probability. Let's switch over to the charts on the Treasury market. This is the TNX. If you're on TOS, it's or thinkorswim, it's TNX:CGI for the 10-year yields. And we have our reversal scout on here. This is a level 4 proprietary indicator, which gives you a good idea as to the momentum and directional condition of the particular market. In this case, it is yields. And you can see when it turned up in here, yields continued to rise. And then when it turned down, yields fell, and there's a very, very good consistency in here. And we use the reversal scout a lot to help us understand conditions of particular cycles as we do that analysis. So you can see that pretty clearly in here. Now, when you look at that, that is the best indication of the cycle rhythms that are in here. But I want to show you how just that pops out when we do our cycle analysis and do our drawings for our members to be able to see the actual cyclical rhythms that are in here. Remember, when you're looking at this, these are yields inverse to the 10-year treasuries. So what you're looking at is the inverse of money flow in or out of the treasuries. So when you look here, as yields move up, money flows are moving out of the ZNs or the treasury market. When yields are moving down, money flows are moving into the treasury market. So it's inverse when we look at this. We'll also look at the ZNs, and you'll get an idea of what I'm talking about. So what I'm going to do is I'm going to move the weekly cycle analysis into here and pop. You can see in there just the beautiful rhythms that are in the market. This is the dominant cycle right over here. Remember, these are cycle brackets. This is not an indicator. It is simply a drawing tool. And you want to learn more about this, please go take a look at the special we're running on our cycle analysis workshop. So there's a dominant cycle and a minor cycle. This is called a harmonic family, a lot like music. And you can see that this dominant cycle is very clear from here to here, and these vertical lines show you where those troughs are. And you can see it divided in half with these minor cycles that are also very clear. Sometimes when something is very strong, as you see right over here, then the minor cycle only has time for a little bit of a dip because the pressure is so strong on the upside. When pressure is strong on the downside, then the upside blip, as you see there, can fail early, and once you break below that low, you have a negative condition. So essentially, this was a positive condition for treasuries, negative for yields. This was a positive condition for yields and negative for treasuries. There was a sell signal right over there, if you believe in candlesticks, which was that evening star. And right over here this week, what we have going on is what would be called the harami and a shooting star. That harami is Japanese for a body within a body, as you see right over there. And that often does give you an idea that something is changing. The support and resistances, or buying and selling, are meeting each other, And in this case, the shooting star says selling came in at that level, or buying in the futures at that level, and you're getting a bounce. So this analysis essentially says to us that we got into this phase over here where the dominant cycle and the minor was pushing up, but now we're getting an indication that the minor cycle would be pushing down in yields, hence the expectation for a top in yields and a pullback in yields. This top of this area right over here is right around 414. Of course, it could get down even further, so that would put us down somewhere over here at around 4.03 at that level. So not really sure how far it's going to dip. If it's going to go down over there, that would be still a condition that would be expected, that yields would be done declining for a little bit early in January. So that says to us that the trade window in here for yields to come down or for the Treasury notes to rally takes you out approximately 6-7 weeks, something like that, which is a pretty good duration of an intermediate trade or a swing trade. So this gives you a very good idea of how the beautiful cyclical action occurs, and we can get a good read on the conditions. Right now, we don't have any sense on the weekly chart of a peak in yields other than this signal and the fact that you had this VTL, valid trend line, connecting these cyclical peaks that says, well, that would be the expectation of a place that yields would stop going up. And also here at the 71.8% retracement level from this peak to this decline. So that is an interesting level for sure. You can see what happened right over here at the 78.6% where it made that peak also. So this is an important area, and we are getting some signs on the weekly chart that a peak in yields is here. Now, when I switch over to the daily chart, you can see the magnificence of the cyclical action. On this chart, we have on the bottom the slim ribbon PO, which is just an absolutely beautiful momentum indicator. You can see in here as it was giving momentum downside resumption signals. Through that, as this was red, it comes off the slim ribbon, which was negative here. Here's where the slim ribbon turned positive. Here's where this turned positive. Here were your upside resumption signals. This is magnificent. Again, this is a level 4 indicator. Slim ribbon is a free indicator that you can have on your charts. So it gives you a great idea as to the momentum conditions. And you often get support and resistance in the slim ribbon. See the resistance here, you see the support here, and here is the downward turn in yields that we're looking at. So we have a few more days in here that yields could fall, bonds could pop, and then again you get into this rising phase. These two cycle lines tell you that this is really the area we expect a decline to occur in yields, but then a bump in yields. See the note here? Short-term peak pending with a rebound in yields into December. So somewhere in here into early December, we expect yields to rebound. Were that to happen, based on our analysis, which says yields should be then again moving down, here we see that on the daily, and here again we see that on the weekly into January. That tells us that we really want to buy futures if yields pop up into this period. So that's why I have that note in there. I hope that is very, very clear. Let's go back to that weekly chart right there, and let's look at the inverse of this, which is the ZN. And you can see here, looking at this pattern in here, you have the big harmonic families, as you see there, with the minor thirds that are in there, and you see a minor third and a minor third right there. This says that we're in the bottoming window right over here for the Treasury futures, and that they are likely to move up. So this area right over here in the ZNs, you can look at TLTs, you can look at the ZBs, the 30s. This is really a buy area where we expect yields to be peaking and then likely getting this rally out over here, which again we expect to happen out into January right there. So this to me is a very, very good spot to be looking to buy the ZNs on this weekly chart. One more quick peek at the daily chart, and you can see the bottoming happening in there. There's your bullish piercing pattern, if you like the candlesticks, and the expectation that the bond market will be rallying. Really, a 111.22 up to about 112.15 is a very reasonable upside target there in the ZN. So what I showed you was interest rates essentially peaking, and at the same time the 10-year notes are bottoming, and this sets up what I think is going to be a very tradable rebound in the Treasury futures markets. The shortest term patterns look like it might take just a little time for the bonds to get traction and begin to move up, so you could see some waffling around here. And since we don't really have anything that says it's bullish yet for the futures, we want to make sure that our entry is with the smallest unit until we get some kind of a confirmation, and then can add on to the position. That is my trade idea on the Treasury yields and Treasury notes, and what I consider to be a very good primer, a good lesson on the beginning for cycle analysis. That's it.